Hello guys, and welcome to the second quarter of the year 2025. We trust God that will do us good and our trading for this season will be very much profitable. In this video, you will be learning how to sell high and buy low using the Fibonacci Retracement tool. In our previous video, we've talked about how you can sell high and buy low using our Bollinger Band. Now in this video, we are going to incorporate the use of our Fibonacci Retracement tool in order for us to have early entry, little stop loss, and a big profit, talking about risk to reward ratio. So briefly, I'll run you through the setting of the indicators. This is the Bollinger Band. The period is 130, deviation is 2.0, shift is 0, and you apply to close. The relative strength index, the period is 9. Here are the levels, and we'll have our commodity channel index. So if you've done your setting correctly, your indicator will be looking exactly like mine. So the essence of these indicators is just an additional tool. So we are not focusing on the indicators. Our goal is we trade the chart with the understanding of the candlestick formation. So let's look at this. First is for us to determine the trend of the market. So I don't want to take you back to history. We analyze based on recent price condition. So looking at this, price is obviously giving us a down move based on this time frame. So this is a lower high, this is a lower low, here we have a new lower high, and this is our lower low. So we can say based on this that we are in a typical downtrend scenario. So you can as well connect your trend line, and it will be obvious that we are in a downtrend. So once you have determined your structural point, what is the next thing you need to know? You need to identify your range. Now, what is your range? Your range are your structural zone. For instance, this is our first range. Our first range is our lower high to our lower low. So once we have identified this range, the next thing is for us to pick up our Fibonacci Retracement tool. So this is the Fibonacci tool, and if you don't have this, all you need to do is you pick it up from your tools and simply do the setting. Here are the levels. This is not the default level, so you are to edit to add level or edit to delete the levels. Okay, so once you have done that, in a downtrend you will be connecting the 100 level of Fibonacci to the lower high, and you connect the 0 level to the lower low. So you are connecting it to your range, the range that you have identified. And now look at this range now from here to here. So you will begin to find entry only when price pull back to any of your point of interest above 50 to 100. The question is, why is it above 50 to 100? Because trading follows a pattern. In a downtrend, your stop loss is meant to be at the lower high. What that implies is that this lower low here, price is permitted to take liquidity or to break structure towards the downside to create a new lower low. But price is not permitted to break the lower high. So whatever make price to break this lower high is automatically a break of structure, which becomes a change of market direction. So price is expected to move in a particular direction in a downtrend. So looking at this now, you can see that price pulled back from here all the way to 61.8 of our Fibonacci retracement tool. But we need to identify our point of interest. First is our order block. So we have our order block in that zone. So price has not mitigated our order block. So price just pulled back into this zone now, tap into 61.8 of the Fibonacci tool, gave us a bearish engulfing candle, which is what we are seeing here, and then come down to create a new lower low. So that is the movement of price in that zone. So now we have a new range. What is our new range? Our new range now is our new lower high and new lower low. So we'll be connecting our Fibonacci to our new range. So this is the new range, new lower low, and our new lower high. So what do? I'll pick my Fibonacci retracement tool and connect it to this new range. Perfect, right? So now you can see now what is the next thing I want to see. Price will now pull back to my Fibonacci retracement zone. So look at from this zone now. Here we have 50 level, price break through it, and then price went all the way to 88.5 of our Fibonacci retracement tool. So at that 88.5, you can see that candlestick pattern that keep forming in that zone. You see this hammer, then you see this particular hammer. So when we get these candle rejections, we now make our entry, or we wait for this particular engulfing candle, this bearish engulfing candle. You sell here, then your stop loss is at the 100 level. Why is your stop loss in that zone? Because you are not expecting price to take the liquidity of the upside. Since it's a downside, we are expecting price to make a new lower low. And remember, we say we use our Bollinger Band as additional tool to sell high, and you realize that price is as well at the zone of this Bollinger Band. So when price come to this zone as well, you can move to your lower time frame to find entry. So you can see this. This is how you can find this same entry on 15 minutes, and you will see that the structure is very much clearer on a 15 minute. lower high, lower low, lower high, lower low. So you can see it again. Then price pull back on the 15 minutes into an imbalance. You can see that came back on this lower time frame, fill into that imbalance. This is so nice, so nice. Fill into that imbalance, and look at here, this is a divergence, and you would have been in this trade that is playing out currently. So this is how you can take advantage of using the Fibonacci retracement tool alongside Bollinger Band seasonal confirmation to sell high and buy low. So you see now that our entry, we will not find any entry below 50, because that is we selling too far from our stop loss. So we want to sell at discount zone, we want to buy at discount zone and then sell at premium zone. So this is how you can take advantage of this strategy, and I believe you have learned something new. Please watch this video more than once so that you can get proper understanding about it. Ask your question in the comment section. Also, there's a link in this video that will lead you to our Telegram channel where we offer mentorship class, and if you are interested, click the link in the description of this video and we will meet to discuss more about it. Thank you, and do have a profitable trading month.